Everyone, welcome to Legal Munch. This is Dr. Kalpana Jayas. In this lecture, we would be understanding principles of taxation. This is the first lecture of the series when it comes to law of taxation in India. We would understand the foundational principles that guide fair and effective tax systems in modern democracies. India is a largest democracy of the world, and these principles have been guiding force when it comes to making taxation law or legislating on tax in India. Before going to the principles, we should know what is the meaning of taxation. What does it actually? How do we understand as definition and meaning of taxation? So, a tax is a compulsory financial charge imposed by the government on individuals or entities to raise revenue for public expenditure. This is not new thing. It is since time when state was originated in societies, even there was no democracy, aristocratic uh, uh, form of government also used to collect taxes, and the main source of revenue generation happens to be tax for the state and governments. Unlike fees or penalties, taxes are mandatory contributions that fund the collective good, the purpose of tax. So taxes are what we pay for civilized society. That has been said, and a very popular statement coming from Justice Holmes, U.S. Supreme Court. And this statement captures the social contract at the heart of taxation. Citizens contribute financially to maintain public infrastructure, security, education, healthcare, and other essential services. What government takes uh, the ground for collection of taxes, what government does for people or society and systems. There are five core purposes of taxation. Before going to the principles, we should know what are the purpose of collection of taxes. So first is definitely revenue generation, so that expenses of the government may run. So revenue generation is the very first object of tax collection. Funding government operations, defense, which is on top-notch priority, had been since time immemorial for all the government. And now today, as India's largest budget is allocated to defense, education, healthcare, infrastructure development, like roads, other platforms, railways, etc. With redistribution, that is another purpose of collecting taxes, which reduces income inequality. Government tries to bridge the gap between haves and not haves, because we do have a social welfare state when it comes to defining our Indian constitution through progressive taxation and social welfare programs. Third one is regulation discouraging harmful behavior through sin taxes on tobacco, alcohol, and pollution. Another purpose is economic stabilization, managing inflation, deflation, and economic cycle to maintain stability. Economic incentives, encouraging investment, innovations, development through tax exemptions and benefits. You must have heard about a lot of financial products are being offered by the financial institutions, banks, about if you buy this product, invest into this, it is tax exempted. So people are encouraged to save money out of their earnings. Somewhere it stabilizes their economic condition. What is the constitutional basis of taxation in India that has been incorporated in Indian Constitution? So Article 265 says no tax shall be levied or collected except by authority of law, meaning thereby Constitution itself is empowering central legislation and state legislature to make law when it comes to tax collection. Tax collection cannot be done without lawful legislation as per section Article 265. This constitutional provision is cornerstone of tax legality in India. Any tax imposed without proper legislative backing is unconstitutional and void. The taxing power is distributed across the three lists in 7th schedule of Indian Constitution. I believe whoever is acquainted a little with the Indian Constitution, there are three subjects list in Indian Constitution under 7th schedule which define the legislative power of union legislature and state legislature. And there is third list which is called concurrent list, over which there is a subject list where center and state can make law. So union list income tax is union list subject excluding agricultural income, custom duties, excise, corporation tax, and GST comes under union list, meaning thereby union government is having power to make law when it comes to tax collection over these subjects. State list, where state legislatures, state government are empowered to make provisions over tax collection, that is land revenue being a local subject, stamp duty, agricultural income tax, and property taxes, which is state list subject over which state governments are empowered to make law. Concurrent list generally excludes taxation because powers are clearly separated between union and state. So there is no conflict when it comes to making law on tax collection. Now coming to the principles of taxation on which basis tax collection laws have been formulated. Adam Smith is one of the most popular name when it comes to naming any economist. 18th century economist Adam Smith laid the foundation of four fundamental core principles in his book, which is a very famous work of Adam Smith, Wealth of Nations, that continue to influence modern tax policy worldwide. So, global impact of the book Wealth of Nations, including India. So, India is not immune to, Wealth of Nations impact when it comes to incorporating the principles. So, first is the principle of equity. So, taxes should be based on ability to pay. The wealthy should contribute proportionately more than those with limited means, meaning thereby the person who is rich earning more should pay more when it comes to justifying. That's a equity principle of equity. Second is canon of certainty. Tax obligations, payment methods, and deadlines must be clear and predictable, never arbitrary. I believe everyone must be knowing about tax messages are there. There is a PAN card in India. When you are, there are tax slabs when it comes to paying taxes and filing your ITR, income tax returns. Canon of convenience, collection methods and timing should align with taxpayer circumstances for minimal hardship. There must be sufficient opportunities, timelines when it comes to paying taxes. There must be an alignment and a good nexus between the government authorities when it comes to paying tax and collection of the tax. It should not be harassing, humiliating, and arbitrary in nature. Canon of economy administrative cost of all collection should be minimal related to revenue generated. It should be economic. The equity principle in practice. Progressive taxation. India's Income Tax Act 1961 implements equity through progressive tax slabs. Higher earners pay increasing marginal rates 5%, 10%, 20%, and 30%, reflecting their greater capacity to contribute. There are two kinds of equity which have been incorporated under India's Income Tax Act 1961. Horizontal equity, equal income, pay equal taxes. Meaning thereby, if you see, there is an implication of Article 14, equality among equals. Vertical equality, higher incomes pay proportionately more than the people who are earning less. That is vertical equity. So there is one landmark case where Mopil Nair versus the state of Kerala, which came in 1961, a Supreme Court struck down a flat rate land tax as discriminatory, violating Article 14 because it ignored taxpayers' ability to pay, whether he can pay or not. Certainty, convenience, and economy. These principles are very much there when it comes to Income Tax Act 1961 is concerned. So certainty in action, the Income Tax Act specifies exact due dates. You must be aware about that. Advanced taxes provision, filing procedures. E.V. Fernandes versus the state of Kerala established that tax liability must be certain. No tax by inference means by taking any guess, or there must be a certainty in everything when it comes to amount, dates, collection, everything, and procedure definitely. Convenience measures, TDS, tax deducted at source, ensures convenience by collecting tax at the point of income generation. GST input tax credit simplifies business compliance and cash flow management. That is an example of convenience measures. Economic efficiency, digitalization through e-filing portals and GST and reduces administrative cost dramatically. Faceless assessment scheme, which was introduced in 2020, eliminated bureaucratic inefficiency and corruption. Now coming to modern principles of taxation in India, which are to productivity and flexibility happens to be the basis and foundation of incorporating modern principles. Because unless any procedure is productive, it is discouraging. So productivity is the first core modern principle when it comes to tax regime is concerned in our country. Tax system should generate adequate, elastic revenue and grow automatically with national income. GST and income tax expand naturally as economy grows. Recently, goods and services tax was introduced by the present government. So that had been a matter of controversy as well as appreciation because that is little complex to understand by non-tax people. Elasticity, a tax structure must adapt to changing economic conditions. During COVID-19, India adjusted GST rates on essential and provided relief measures to stimulate demand. Simplicity, being simple is the most convenient when it comes to adapting any new regime. So law should be understandable to reduce evasion and litigation. The new tax regime 2020 simplified slab structures for average taxpayers. Neutrality, taxes should not distort economic decisions unnecessarily. GST replaced cascading taxes to create unified, neutral national market. Economic theories and key judicial precedent. At the end, I would like to consolidate the key points of this lecture. Benefit principles, pay taxes proportional to benefit received, for example, property tax for local amenities. Ability to pay tax based on capacity, not benefits, foundation of progressive systems. Equal sacrifice, tax burden should impose comparable hardship across all taxpayers. Diversification, multiple revenue sources ensure fiscal stability and resilience. In the end, that is ultimate aim of any government or any regime, taxation as social justice, both ways when it comes to taxpayers and redistribution of wealth for doing social welfare work by the governments. So, a just tax system is not merely a fiscal but reflection of social justice and constitutional morality. Modern tax systems balance competing objectives, generating sufficient revenue while ensuring fairness, promoting economic growth while protecting the vulnerable, and maintaining administrative efficiency while preserving taxpayer rights. So, the principles established by classical economists refined through constitutional interpretation, create a framework for fiscal justice, equality, equity through design. Progressive structures ensure those with greater capacity contribute more. Certainty and transparency, clear laws, and digital systems protect taxpayer rights and reduce disputes. Economic enablement, smart incentives, and neutral structures support sustainable development. So, with this, I would end here. Happy learning. Thank you so much.